So in a moment, I actually want to open up this briefcase and I'm going to show you the $54,000 that I made on the very first house that I transacted. And the purpose of today's video is to talk about the number one problem that investors make when they get started. They don't buy a house with enough equity. They don't actually have a formula for what a good deal is. Oh, the house is $150,000 and I can get it for $140,000. That's $10,000. To me, $10,000 is a lot of money, so that's a good deal. I would never buy that house. That house is not a good deal. Now, right here in this briefcase, I've got $50,000, $54,000 to be exact. That's how much money I made on that very first house I bought and sold in Provo. And let's talk about why this house was a good deal. On this side, I have a stack of money, okay? This stack represents the equity that I walked into when I bought the house, okay? So when I sold the house, this is what I technically got, but the moment I signed my papers, the moment I finished my last signature on that closing with the bank, this is how much net worth I walked into, okay? Then in the course of holding the property, I did my lease option. I had a tenant come into the house. This represents my down payment that I collected from the family that moved in. They had to give this to me just to come into the home. This is more than a security deposit that you'd find on a straight rental. This money right here, this is the cash flow. So this is the money that I would get after the mortgage was paid every month. There was always leftover. On this house, there was over $500 a month of leftover money. Okay? Buying the house always comes, if you do it correctly, with tax advantages. This represents the money that I saved on money that I should have paid the government that I didn't have to because I bought this house. And this money over here, this represents all the money that I made after I sell it based on the market appreciating in, I might add, one of the worst economies that we've had since the Great Depression. So buying this house below the median and having it targeted at the right price range is what made this money possible, because even when the economy is tanking, if you're following the right formula, it doesn't matter. Now, all of that combined represents my winnings on that one particular deal. And so I would say make sure at the end of the day that you have a house that follows a specific formula. If you want to know what that formula is, that book that I wrote, The Straight Path to Real Estate Wealth, get yourself a copy of that book in the link below, and that will help you learn exactly the formula that I still use today on the hundreds of homes that I own.